Guys, how's it going? So a couple of weeks ago I did an interview with FTMO and I talked about how I made over $60,000 in 1 month. Since then I've received tons of messages asking what strategy I trade with. I would happily share my strategy, but the goal is for you not to take my trades exactly how I do, but to understand my process and then decide which of it you can add to your plan, if any. Before I go into it, I need to point out that a strategy is only 20% of a winning trader's plan, maybe less. You may follow my strategy and still not be profitable, unfortunately. In fact, Richard Dennis, one of the legendary traders in the Market Wizards, he mentioned that he could post a strategy on the front page of the Wall Street Journal and people would still fail. Therefore, it is important to understand that all strategies work. What causes traders to fail is that they're not backtesting, they don't have a plan, and if they do, they're not following this plan. They're overtrading, they risk too much per trade, and they have terrible rewards, and that's just some of many. So keep that in mind while I show you my strategy. I will start with my risk management plan. It may seem intense, but it's simple. So follow closely. So I use two strategies and I diversify my risk on both of them. The idea is I do not want to risk more than 2% of my entire account at any given time, and I don't want to risk more than 5% of my portfolio or account on any given day. So at any given time, I would risk 1% on the first strategy and another 1% on the second strategy. So on the first strategy, I would trade two pairs, the pound US dollars and the pound yen. Yes, they are positively correlated, but I found out that about 80% of the time, only one of these two pairs would provide an opportunity. So I would risk 0.5% per pair, and I'll give myself two opportunities to be wrong on each pair, which means that I can take two losses on the pound US dollars and two losses on the pound yen for a total of 4 losses before I call it a day on this strategy. So 0.5, 0.5, 0.5, 0.5 to equal a max loss of 2%. All right. So on the second strategy, I want to risk a maximum of 3% for the day. So 3% max loss for this strategy and 2% max loss for the first strategy, making it a total of 5% max loss for the day. So on this strategy, I can enter 4 trades at a time, depending on which pair provides an opportunity, and I can take a maximum of 3 losses per day on each trades before I pack up for the day. Therefore, for the maths to work out, I have to risk 0.25% on each pair. So if I lost all 4 trades that I've entered, I would lose only a total of 1% of my account. So that's 0.25 times 4, and like I said, I give myself 3 tries to be wrong. So if I enter the pound US dollar, for example, and I lose the first trade, I enter the second time, and then after the third time I give up for the day, but I would have only lost 0.75% on each pair. So the risk may seem very small, but I aim for a 1 to 10 risk to reward ratio, so the profits make up for the little risk. I used the first strategy on the FTMO account, so I need to point out that instead of risking just 0.5% per trade, I risked 1% per trade. So I basically doubled my risk since I was just trading one strategy on this account. So the max loss I would take on each pair is 2%. And if I take the max loss on both pairs, the maximum I would lose for the day is 4% before I pack up for the day. So my trading times are from 2 a.m. to 11 a.m. Eastern Standard Time, because that's when the market is the most volatile, and I always aim for a 1 to 5 risk to reward ratios on my trades. Not every time it gets there, but I have a trade management plan that locks in profits at certain points. Finally, I target the highs and the lows of the day. So I'll go over to the charts now and show you examples. So I start with the daily chart. We have 2 pairs over here. We have the pound USD and the pound yen. I want to determine the bias for the day. Do I want to be a buyer or do I want to be a seller? And how do I determine that? I look at the highs and the lows. The idea is price If price is coming from the high, it's heading back down to the lows, and vice versa. All right. So I keep trying to, if price is coming from a high, I keep trying to sell until I see a candle that prints telling me price is going in the opposite direction, like an engulfing candle in the opposite direction of price. Then I'll change my buys to a buy, thinking price is heading back up to resistance. I'll show you an example quickly on the pound yen. We see price break out of support over here. Then obviously my bias was a sell all the way back down to this support level here. Price obviously broke out of the support, and I'm thinking price is heading back down to this resistance level over here. All right, price ended up going back down there, came back up. Obviously my bias then changes. I'm thinking price is heading back up to resistance. Price didn't get there, printed an engulfing, or not engulfing candle, more like a railroad pattern or a piercing candle. Printed that candle. I'm thinking obviously, okay, this was a false breakout. Price is likely heading back down to support. So price tried coming all the way down. I would have been bearish all the way until I saw this candle. I'm thinking now I want to be bullish because of this engulfing candle. So price is likely heading back up to resistance. Price didn't, printed a bearish candle, and I want to sell. Obviously my bias was bearish, and it was bearish at this point because I'm thinking price is heading back down to at least this level over here. Price didn't, went higher, consolidated a little bit. My bias at this point was obviously sell, and it made sense because price already broke out of this trend line over here. But I don't trade with the trend using the strategy, so it doesn't really matter. But I was a seller at this point, and seeing how this candle closed, I'm thinking price is likely heading back down to the support. And then price did, and I would have been bullish once price touches the support over here, and then obviously continue to be bullish, thinking price is heading back up to this resistance level there. In this case, price tried and failed. I see an engulfing candle, so I'm bearish all the way back down to the support level here. So you see price slowly creep lower. I'm bearish all the way until price touches there. This was the last candle on Friday, and price would obviously, I think, touch this level, and I will continue to be bearish until I see maybe an engulfing candle that says price maybe heading back up to this level here. So that's how I determine my bias for the day. I'm not always right, but it's just a method that I use to determine what the trend is. All right, so I'll go quickly to the 4-hour chart and show you how I execute my trades. So the last trade I worked using this strategy was on this day. It's been an incredibly slow month for this strategy. Price has been extremely volatile, so even though I'm getting the directional bias right, maybe I'm just not getting my entries at the high and the lows. By the time I wake up, price is already taken off. All right, or maybe I just take a loss, but that's the nature of the beast. You have to keep taking those losses and patiently wait for your winners. All right, so on this day, I'll use the replay button. For clarity, I'll just remove all these joins for now. So this was the last trade I worked. I already explained my reasoning behind this trade on this day. So this was what I saw with the previous day's close. So I go on the 4-hour chart, and I'll show you quickly the pattern that I saw. So usually when Asia prints a high and a low, you find that London tries to reverse price, and then New York goes in the opposite direction. And then I can show you examples after examples. Obviously, it doesn't happen exactly like this formation always. There are different patterns or different formations to it. But this is the idea, and it makes sense because the market makers, they're executing their trades at the highs, at the lows. So they're targeting stops at those levels, to either liquidate their positions or use those stop losses to enter their large positions as well. So it made sense that I target the highs and lows for my trade, because then I can catch all those big moves. So back to my trade for that day. Usually the highs and lows of the day are formed on the 4 hours level. All right. So I don't know which of the 4 hour level it is. So I'm waking up at 2 o'clock in the market and I want to see price going the opposite direction of where it intends to go, because again, that's the idea. If price plans to come down, price goes up first. If price wants to go up, price comes down first. That's my reasoning. It doesn't always happen, but again, that's the pattern that I look for. Now, I don't know which of the level price will respect, so I draw my 4 hour levels, patiently waiting just to see how price reacts. So I see the price has touched resistance already, waking up. This candle closed at 1 a.m. and I'm waking up 1 hour after that. I'm just going to remove this level since we see price already tested it. So I'm looking on the 45 minutes and the 1 hour chart, and I took this trade on the 45 minutes chart. So I'm already ready to sell the first bearish candle that I see. And so I wake up at this candle and I wait. And the first candle I see, there's a rejection at this level over here. Now I see this rejection. I'm happy to take this trade. It's not a perfect bearish candle, but I see that buyers are getting exhausted and sellers are coming into the market. So I'm happy to take this trade at this point using a tight stop loss, risking no more than 20 pips, obviously, because the daily range for the pound pairs are usually 100 pips to about 120 pips or thereabouts. So if I risk 20 pips, I know that I can target the full daily range, or maybe even till the first session on the next day. I want to be out of the trade. Especially when I take those trades at the highs and the lows. So I take this trade aiming for a 1-to-5 risk to reward ratio on the trade. And on this day, I got stopped out of my position. Remember, I have 2 tries on each pairs. So usually, because I know that I use a tight stop loss, so it's possible that price is stopping me out, then I would scale down to the 15 minutes and watch how the first 2 candles after I get stopped out. Okay, so I see this candle and I see, okay, this is a railroad pattern, and or you can call it a piercing candle if you want. I see this behavior and I'm thinking, okay, it's likely I just got stop hunted. So I'm going to give it another try for the day. If I get stopped out of this position, it would be my final position or final trade for the day. Now I take this trade, again, aiming for a 1-to-5 risk to reward ratio on the trade. And this was the trade that worked. Yep, there you go. Price actually went a lot lower. So there you go. That's how I take my trade using the strategy. Again, it's been a slow month, but we still have another half of the month to go. Usually I get maybe 5 or 6 of this kind of trades on an average month, and I take 10 losses in the process, and I end the month with 15 to 20 hours, sometimes more. So that's how I take the trades in this strategy. So I'll go over to the next strategy very quickly. Now you see there are many pairs open. Yes, I comb through all the major pairs, including the pound, JPY, and gold. And I want to see what the trend is. I want to identify the trend. So, the intention is I want to trade in the direction of the trend. So we have the daily chart for the AUD USD. We're going to use this as an example. So you see here that the trend is bearish. All right. So I want to see price form a high and then try to test that high. The intention is I want to be, or the pattern that I look for is a double top, double bottom formation. All right. So the moment price tests this level on the daily, I scale down to the 5 minutes chart. And I'm just going to go over to, I think that was 6th of July. There you go. This was the trade that I took on that day. So we see here price test this level at 2 o'clock or 2:20. And I'm already looking for my double top, double bottom formation. I find that double top, double bottom formation on this level. Price tested it, couldn't break it, and printed this bearish candle. Put my stop loss at a higher structure, and Bob's your uncle. All right. So that's how I take this trade. And then the next day I will be bearish again because I think price is coming from a high. There's enough momentum to push price downwards, at least for the next day. All right, so it's just simple price action. So I'd have tried to continue selling the next day, looking again for that double top, double bottom formation. I was wrong the first time, another double top, double bottom formation, wrong the second time. Remember, I give myself 3 tries to be wrong, and the third time, maybe does it work, maybe it doesn't, I don't know. Oh, look, it's working. No, it doesn't work. It hit my stop loss. So I'm done for this day. I had to show you this because it's not just about the profit, it's about the losses. And if you can control and manage your risk, the rewards would take care of itself. In fact, every trade that I enter, I think I'm going to lose it. In fact, I have this idea that this trade I'm entering is going to be a loser. And if it works, great. If it doesn't work, I already accepted that loss already. I'll show you one more example, which was on Thursday. On this trade, I showed this trade on my Instagram account, so you can check that out there as well. Price formed a high, tried to break it, couldn't. So at this point, I'm already anticipating that the next candle would be bearish, obviously because of the trend as well. So on this day, which was Thursday, I scaled down to the 5 minutes again, and I took this trade. It was a beautiful quick trade as well. Entered, found a double top formation at 245, and then I took a 1 to 10 on this trade. All right, again with the same idea, the price will continue to be bearish for the next day. I tried again. I saw this double top formation, not the best setup, I have to say, but I had to take the trade because you have to take all your trades. You can't think, you have to follow what your plan tells you to do. All right, so I took this trade, took the loss, and tried again at the second double top formation that I saw after I got stopped out, and that was the trade that worked. Usually I have a trade management plan where once price gets to 9.5, I'm already ready. I'm ready to be out. So once price gets to 9.5, I'm moving my stop loss to 9 hour. Whether I hit it there or not, I don't want to sit through all this madness. So I'm happy to take a 9 hour on this day. So for a total of 18 hour on the AUD USD. And I did the same thing on the AUD chef, the USD chef as well. This was another trade I showed on my Instagram account. It was on this day. You see the potential double bottom formation forming. I took an L at this point in the search for this trade. Eventually saw another double bottom formation close to the low of the day, and then I was able to ride that out to 10R. Try it again the next day. I'm still on this trade. Price is just moving sideways, messing about. But I've gone break even on this trade. So let's see how Monday opens. All right, that's it for this strategy. There you go, guys. That's how I take my trades on a daily basis. I take lots of losses in the process, so clearly it's not the holy grail, but it works because of its high risk to reward ratio. Again, I need to point out that that's the key to success, and it lies in how much you make when you're right versus how much you lose when you are wrong. And then my risk management plan, which is actually more important than the strategy itself, and that ensures that I can survive any drawdowns. So I hope you guys got something out of this. Do not forget to like and subscribe if you haven't, and remember to always follow your plan and stay disciplined. I wish you all the luck and success. See you next time.